Now this is an update to the video that I did on the 30th of June 2014, and in there I went into a lot of depth how I believe I've taken Gann's work to a whole new level. It was pretty deep. Probably most of you just won't get it at all. Some of you will, but most of you won't. But I basically show how it's not as simple as Gann made all this seem. It's far more complicated. Sometimes it's easier than this and sometimes it's harder, but basically what I said was that the market was going to stop at 80.9523% from the major low that it made in 2009. And if you look at the very first video I put on YouTube, w.d.gann, it's something like getting started, I go over the rule that 50% is an important percentage to rise from a low, and I showed you from the low in 2014 that a rise of 50% was at the same level as 80.952, and I also put this level on for the future that could be important. And then I explained some things about it on certain strange weird percentages on the way down, because this works in a strange and weird way, and it took me quite a bit of time to work it out. Now I also showed you these really strange angles, and I went into a lot of depth how easy it is to do angles wrong. And I showed you these strange sets of numbers: 65 by 2, 51 by 2, 39 by 2, 29 by 2, 21 by 2, and those were hindsight. And then I worked out these for the future. This one didn't work, and then I showed you an 11 by 2, gave you the top here, and the next one would be a 9 by 2. And then I showed you what the pattern was, that there are 7 odd numbers between 65 and 51. There are 6 odd numbers between 51 and 39. There are 5 odd numbers between 39 and 29. There are 4 odd numbers between 29 and 21. There are 3 odd numbers between 15 and 21. There are 2 odd numbers between 11 and 15, and there's 1 odd number between 9 and 11. So it goes 1, 2, 4, sorry, it goes 1 odd number, 2 odd numbers, 3 odd numbers, 4 odd numbers, 5 odd numbers, 6 odd numbers, 7 odd numbers. So you can see that something that looks to start off with as if there's no pattern, you can actually see there is a pattern. And in the video at the end I said the big problem now is what's the next one in the series, because if there's 1 odd number between there and there, what's the next one that's going to work? And I said I didn't really know, but I put on the chart this number, a 7 by 2. Now there's only 1 odd number between the 7 by 2 and a 9 by 2, so the pattern at that stage had finished. So I wasn't, that pleased with that, but it coincided with the level that I said might work in the future. So let's see what happens. So this was done on the 30th of June. Each line that you see represents 5 trading days, so you're looking at huge amounts of time. So that's another week, that's another week, that's another week, that's another week, that's another week. We haven't got there yet. That's another week, and we actually got to it on that week there, and the exact top of that week was made at 80.9523%. What happened? You can see the market's been going up for about 8 weeks, and the market suddenly falls very quickly. Okay, then it goes up a little bit, and then it goes back up to the level again, and it actually unfortunately goes through the angle, which kind of put me off. So it's still being held by 80.952, the number I said would work, before it ever got there, a few months before it got there probably, and then the market falls very strongly. So what hopefully you can see is that the markets are basically just mathematical. You just need to find out the mathematics that it's all based on, and you need to know what the master time factor is, of course, for these angles. And then since then we've had the rally in the equity markets. Now change to the daily chart, and this was the percentage that I was looking at, 80.9523%, and I did it when the market looked like this, and the market went down, went up, came down, shooting down, went up, came down, went up, came down, went up. Everything looks fantastic, so if you're in the market you'd be quite happy, and then the market gets to the percentage that I talked about back at the end of June, what happened? The market collapsed. Now, in the previous video I said I don't really trade the ASX just because of the time difference between Australia and England. You know, I'm just getting out of bed when the Australian market is just closing. So when I kind of looked at the price, because I was actually going to short this with a stop loss above this high here, but it was already right down here when I came to make the trade. So it's very important that you put your stop loss not in a random place, but in a place that you say to yourself, if it gets here, I want to get out of the market because I'm wrong. In this particular case, I would have to have my stop loss above this top here, which from a Gann point of view, he would call a trend indicator line top. Now, if the market's right down here, and I've got to put my stop loss above this high here, then if the market comes back, I could lose quite a lot of money. If the market would have been about here when I looked at the Australian market first thing in the morning, then I probably would have made the trade. Again, if I could be willing to get out of bed at that time. But so it just moved too far in one day to actually get in, so it's not always easy. You see, it's very important that you don't just jump in. A bit like here, the market topped out, then you know, you might decide to make the trade here, then it goes shooting back up again, you know, and you're in a bad situation. And that's really the same thing here. You've got to do things near the actual trade, so it just didn't give me an opportunity to do it. So you know, there's always other opportunities, so you don't trade just for the sake of trading. But the next day it comes down. Now obviously knowing when to get out of a trade is also incredibly important. So let's say that I had made the trade. First of all, my stop loss would have been above this high here. Now I'm right down here, I would move my stop loss to my break-even point. Now I wouldn't do it here because my break-even point would be right down here. So if I would have got in about here, say 5, 6, 10, then I would move my stop loss to break-even. And that should always be your first priority. But you can't move your stop loss too soon, because if you move your stop loss too soon, you'll keep getting randomly stop lossed out. And the reason most people lose money is because they put their stop losses in a random place, and so what's going to happen to the stop losses? They're going to randomly get stop lossed out. Anyway, next day it goes down. Now Gann had a rule called the 7 to 10 day rule, so if we were to go down 7 days consecutively making lower tops and bottoms, I would move my stop loss above the 7th day. So we've now gone down 1, 2, 3 days. Then we go down 4 days, and then we make what Gann called an outside day. So you've got a higher high than the previous day and a lower low than the previous low, and then we go shooting down. So Gann says we've now formed what's called a trend indicator top. So we would move our stop loss from our break-even point to above this high here. Then the market forms an inside day. You will find that lots of markets make bottoms on inside days. Now don't make the big mistake of just saying that's a rule and I'm always going to follow it. But basically, if the market falls out of the inside day to the downside, especially if it's a big fast movement, you move your stop loss above the inside day. If the market goes up and breaks the top of the inside day without going below the low, then you would get out. So in other words, you put your stop loss above the inside day, and in this particular case you'd be stop lossed out round about here, which was the right thing to do, because if you wouldn't have got out, then yeah, you would have seen all your profit disappear. And then it kind of held on the angle again, sorry, on the percentages, and then we had the big fall that's had. So that was the time to trade, that was the time to get out, and it was the right time to get out. Okay, so hope you found it interesting, and if you'd like to get more information, you can email me at gary@gann.co.uk. If you're interested in attending a webinar, then if you contact me at the same address, and if I've got enough people, I'll hold a webinar. So thank you for watching.